So we can see that April resistance breakout, return May on retest and confirm the retest, break of a demand floor, supply roof, break of a supply roof, return back here as a demand floor. And from the roof, we have a supply roof acting as a dynamic resistance to upswing. And we have seen how price was capped. And in the future, it is also a potential buy confirmation. So what I mean, in the future, if we have a breakout from this level, it will be a break of the previous high. So this we must keep in mind. Now, another thing worthy of note is the descending trend line breakout at this level. So we must put that steep trend line, and so we have a breakout and a retest RT. And you see that technically price is expected to come back into this structure. And that was why I have called a buy at 3,200 into 3,214. Technically, if you place the next day candle on the assumption that, or on the probability that you're expecting a retest, that gives you 3,207 as the next potential buy opportunity, in line with the structure of the market. In line with the structure of the market. Trading is probability. And when it comes to trading and analyzing gold market, the market is a market of very strong liquidity. And one must be very cautious while analyzing gold. Then another thing we have here is a breakout of a key demand level. This is break of a key daily demand level, 3,286.881. SR level 1, 2, 3, breakout structure, SR, another SR held price since May, and we broke that structure on Friday. So breaking that structure on Friday technically calls for retest. However, the market might choose not to retest it because we already have a bearish breakout from another structure over here, which I also want to point out. So you can see that breakout, and the price came back and retested it. So we are under intense bearish impulse. So that bearish impulse was what broke a strong demand floor at the daily close, 3,286. So it is expected that selling should continue. 3,286 break of a daily demand floor. You can see the candle daily close below the structure. So technically, if the market opens, there is a very high probability that selling will continue till you head into 3,200 level, 3,207, 3,214, and price will go back to retest 3,330. And a pushback into that structure might draw the entire liquidity and return price to a new zone. Trading is probability. So when we are trading price action, we are trading price action with the mindset that we are 100% aware that we are dealing with probability. There is a fair value gap around this area where I expect that price should tap in and provide us with another buy opportunity in line with the structure of the market. Remember that we are trend traders. We are trend traders. We are following the direction of market rather than trying to predict it. The reason it's dangerous to predict the market is because you do not have the money. The only one who can predict the market accurately is the person who is moving the market, who is responsible for the upswing and downswing. So as long as it's not in your custody, that's going to make it very difficult for you to get accurately. So the next thing we want to see is to bring in our ascending trend line. Then one more thing, you go back to your line chart, you will also see there is another breakout structure at this area. And let's be objective about that. There is a breakout structure followed by a retest. We have here as our SR level, we have here as a demand floor breakout structure, SR level, return here, demand floor 1, demand floor 2, demand floor 3, break of a demand floor, followed by a retest. We have seen a bearish drop. This is a second confirmation of a bearish impulse in the price action of XAUUSD. Now, these are all potential sell zones. In the future, should price return into that zone, feel free to sell at this zone. So trading is 100% probability. Whether you're analyzing bond, you're analyzing stocks, whatever you're analyzing, they are all probability. Everything is all probability. Yes, they are all probability. So the earlier we understand it, maybe the better for everybody. So now let's look at the ascending trend line and see if they are capable of providing a buy opportunity with the current reality of the market. So we have an ascending trend line here. And I want to point out key areas of respected price action on daily time frame. And lastly, close of the week candle, putting gold market in a serious jeopardy. So with where the market is now, to be honest, to make a clear-cut trade directional bias, it's a little bit complex at the moment. The reason is because you have conflicting evidence, an ascending trend line guiding the market. There has to be a clear daily breakout from the ascending trend line to affirm that this sell pressure we received here, it's a valid sell pressure that is capable of touching down to retest the descending trend line breakout, connecting 3,500, connecting 3,400 and 440, and 3,355 into 60. We had a breakout and we had a retest in the zone of 3,296.95. If we return into that structure, that would be 3,200, 3,207, where you expect another bullish reaction. So if we break out from that structure, ultimately we want to fulfill the demand floor, where we have had series of weak rejections starting from April price action, acting as a dynamic support with a strong daily rejection indicating buy liquidity on a descending trend line. Here is an area of high probability buy. A return into this by any means, through fundamental, through any means, will be the SAU USD trading below 2000, below 3000 mark. Whatever brings price here, we see price trade below 3000. We don't want to see that. So that's what we have for now. Let's keep it short. Let's keep it short. Bye bye. Have a good day.